Hey guys, real quick couple minute video here on GLD, just following up to the prior video on the miners. This is the GLD ETF, mimicking the gold movement. What I did was I ran a 20 SMA simple moving average and a daily EMA close 90-day moving average. So historically, every time we've seen the shorter term moving average cross above the longer term moving average, we've continued an uptrend to the upside. They may have come really close to crossing over, but we've never had a move where they've crossed over without a continuation move to the either downside or the right or the upside, depending on what the crossover is. So short-term moving average crossing over, the longer term we have a nice move to the upside. Short-term moving average crossing below the longer term, we either have a sideways to down movement or a sharp movement down. Here's a crossover to the upside, obviously the continuation move. Crossover, we have another downtrend here, not abrupt, but you get the picture. Crossover to the upside, a little tap. If we zoom in here, you can see crossed over. They came in tight, came in real tight, continued the uptrend, but we just crossed over to the downside. The only thing I can tell you about this little movement here is, number one, the gap has widened in these areas of consolidation, and the angle of turning up here is a lot sharper because we never had this type of a V pattern historically in the last several years on gold, where it's gone this far down on the oversold and then snapped back that far on the pullback to the upside. So you're getting a little bit of a different configuration on the crossover here. What I'm saying is the angles as they separated turned up, where usually when we have a crossover, the angles are like sideways to down, sideways to down, sideways to down, and then sideways to down, slight up here, but you have a very sharp V here to mimic the movement in this here as well. So we have to respect the crossover still there regardless. They could cross back over each other, but probably a little bit overbought here. I like the Fibonacci not being drawn to the top of the overall high at 159.37 because I think the 161.8 comes straight across and mimics this crossover here and this baseline breakout where we had this huge run. So movement up, retest, breakthrough, and then kind of retesting this area on this candle right here at the 168, push through, and then boom up there. So I think this somewhere in this area is a little bit better on the 161.8 extension. Obviously the 100% would be the pivotal point here where we have two directional changes on different paths intersecting on channels. That's the 100% area on the pullback, and then you have this big move here back down and then up. If we zoom in, it's also going to line up with a couple of the little levels we saw here on the bounce. The initial bounce took us right to the 50% retracement. Here you come with some energy, not spot on the line, but you get the idea. Up to the channel, some energy. Pulling back, couldn't get back down to the lower channel. Energy starts to pull it back up again. We closed right on the 50% line. So touch it, pull back, close on it, and then you have the big gap. Now we seem to have this little area of consolidation. I like that it held 4 days over both moving averages, so that's a little bit of a positive for gold. It's outperforming the miners. But we need to kind of keep an open mind on Monday that this could pull back with the market or sideways movement, cross back over, and then start another trend to the upside. I think the percentages are our chances that we go a little bit further down, at least on the miners, and gold kind of consolidates and maybe retests the 38.2 over here in this area here. It would make sense, causing these to kind of flatten out. So a little bit of rush to safety. Could get a pullback with the market here. Kind of neutral to down on gold for next week. That's my opinion. Miners, I'm getting a little bit cautious on, a little bit bearish. Still have a little bit of JNUG left. I might flip the script and go to JDST. We talked about that in the prior video. Just giving you my opinion here on gold. Long wicks here, kind of selling into strength. Closed the lower of the three levels here. I'm sorry, the lower of these two candles. But still, somewhat positive. Above the moving averages, above the 123.6 pullback on the Fibonacci. So we'll see. Monday's going to be a real interesting day for gold.